have done yesterday as a part of the financial statements, where we have gone through different financial statements such as balance sheet, income statement, and statement of retained earnings. So what we had it here, let me just go very quickly so that we can just summarize it. So the income statement, we said, is all about putting all the revenues on one side and the expenses on the other side and getting the net income. That gives you actually the bottom line of the profits. Okay, revenue minus the cost of goods sold minus depreciation, selling administrative expenses, other expenses, and then you derive the EBIT. EBIT is like operating income, earnings before interest and tax. Then you pay the interest, then you derive the taxable income, the income that's subject to the taxes, or we call it as abbreviated as EBT, earnings before tax. Then we deduct the tax and we come with a net income. And this net income is divided into two, we said. Some will go to dividends, as dividends to the shareholders. The remaining will be kept as a retained earnings. So it will be the additional amount to retained earnings. That's what we did it last time. And coming to the balance sheet, it's all about like what the company owns and where the company got the money to finance these assets that they have it. Either it's a liability or the equity. And we said also that the assets and the liabilities are listed in the order of the liquidity position. It goes from the most liquid to the less liquid. By most liquid, we mean how easily you can convert to the cash. It shows the capability of the conversion into the cash, and all the current assets and the current liabilities have got the maturities less than 1 year. And apart from that, the long-term liabilities and the long-term assets, they are all more than 1 year. That's what we said and underlined. And we said you need to know the structure of the balance sheet, you need to know the structure of the income statement. And the statement of retained earnings was saying like beginning balance of the retained earnings plus net income minus the dividend. And that will give you the ending balance of the retained earnings. And we said also there are formulas that we need to take into account are the cash flows from assets. This is what we said. It has got the money that comes from the cash will go to two stakeholders, creditors and shareholders. So cash flow to creditors plus cash flow to shareholders. And cash flow to creditors, it will go as interest. And if there's some net new borrowing, we said ending borrowing minus beginning borrowing. That's what we said. But we said, please be careful about the sign, about this borrowing amount, whether the money comes into the company, whether the money goes out of the company. If the money goes out of the company, then it should be plus. If the money comes into the company, then it should be minus. Then you should subtract from the interest payment. So to get the difference between these things. And to understand that, then you should just subtract from ending balance, ending borrowing minus beginning borrowing. And how we differentiate, we said the ending and the beginning borrowing is like, if we are given, let's say 2024 and 2023, 2024 gonna be your ending and 2023 gonna be your beginning balance. That's what we said. Cash flow to shareholders. You give to the shareholders some money and they are called dividends, okay? Dividends. And again, net new equity. Ending, beginning. The same picture in here as it was in borrowing amount. And we said that those cash flow from assets are generated from OCF, operational cash flow, net capital spending, and change in net working capital. OCF, we said, is all about EBIT, like operational income, plus depreciation. Why we're adding back the depreciation? Because it's a non-cash item that should be added back. It has been deducted due to the to keep the compliance of the tax deduction issue, and minus the tax in here. And we said you can go from up and down to calculate the OCF, and you can go from down to up to calculate the OCF using the income statement. One is using the EBIT approach, the other one is using the net income approach. When you use the net income approach, you will just add to the net income your depreciation and interest, where you will get your EBIT, and you don't have to kind of subtract the taxes because net income is already tax deducted value. That's what we said. And net capital spending, it's all about the fixed asset, long-term assets. Ending fixed asset minus beginning fixed assets. Ending fixed asset minus beginning fixed asset. Plus depreciation. It could be anything. You can buy the land, you can sell the land, so whatever. And the last one is change in net working capital. It's basically ending net working capital minus beginning net working capital. And the net working capital is what? Is the current asset minus current liabilities. Perfect. Any question? That's all about this chapter that you need to know. The most important thing, you need to understand the logic that stands behind it, okay? And let's practice some questions, and at the end I will give you the activity, you will do it, and you will submit it to Moodle. You can do it on the paper, you can by using the computer, you can do it on your Excel, and then take the picture of Excel and send it. Okay? By sending, I mean uploading your results. Again, your activities are not going to be graded for correctness. You're going to get the points for your submission. I will check it. But the only thing I want to see, whether did you put some efforts to do it. Any missed activities, unfortunately, cannot be recovered, cannot be made up. So you have this chance only once. Deadlines today, during the class. End of the class, you have like 20 minutes left. During this 20 minutes, you solve it, you submit it before you leave the class. You can finish early, you can go earlier home. If not, then you just strive it to do it, okay? Now, let's start with the problems. We'll go together, okay? Its first problem is related to balance sheet, okay? Chunk Enterprise has current assets of 300,000, total asset of 750, and it also has good current liabilities 125, common equity is this, return earnings 85. How much long-term debt and fixed asset does the firm have? So basically you need to construct the balance sheet in order to find out this variable. So what I will do, I'll just put these values into Excel. Okay. So I have current assets, which is 300,000. I have total assets, which is 750,000. Then I have current liabilities, which is 250,000. And now, and I've got like common equity, or I can call it like common stocks. Common equity, it's basically 250. It's 125. I mix up the numbers, yeah? It's 125. Thank you. And we have return earnings, which is 85,000. Okay, so I got all the numbers, I guess. Yeah, and now I'm asked to calculate long-term debt and so on. So basically, what I'm gonna do, I'm just gonna construct it. I'll put the current liability on this side, and this values I'm gonna put it here. Okay, and total assets I'm gonna put it here. Look, and these are the values that I have it now, and my total liability plus total equity is the same as total asset. That's the sure. And I need to find the fixed asset, yeah, and I need to find long-term debt. Yeah, that's what I need to find it. So my fixed asset here, my current asset is here, current liability. So how can I find the fixed asset? So total asset minus the current asset. That's the logic. And what about the long-term debt? Minus return earnings, minus this, and minus. Okay, that's the way we find that we asked. Okay. Any questions? Please don't feel shy or hesitated to ask. Okay. So this is the long-term debt and the fixed asset same. Okay. The top class company had the revenues of 925. So in here, you're going to be dealing with income statement. Okay. So I have revenue here, which is 950,000. Operating expenses, 325. Excluding the depreciation expense. And depreciation expense is 125, if I'm not mistaken. Interest costs, we have interest. Expense, it's 55,000. Tax rate is 34. So we have tax, 34%. Calculate the net income after the tax. So again, we're going to construct the income statement. So revenue minus all expenses, we get. Sure, I might be mistaken. Yeah, my bad. Now, I got this one. Now my revenue minus OPEX minus depreciation, and I will get EBIT. So my EBIT is basically revenue minus OPEX minus depreciation amount. That's where I have it. And from EBIT, I'm going to subtract interest. I can have here the EBT, the abbreviated word for taxable income. So this minus interest. And how do I calculate the tax? Yeah. This multiplied by 34%. And then from EBT, we subtract the tax. I have a headache. We subtract the tax. And we get the net income. Everything, all the formulas will be given to you. Everything will be gonna given to you. Not the paper sheet, but it will be on the Moodle. The formulas will be available, you'll be using them. But in Excel, actually, you don't have to use the formula. There will be only the things you need to know is the functions, like future value, present value, and so on. But let me take the attendance. Okay. Sabina, here. She's here. Let me check. No. Angelina. Adele. Ayolum. Ayolum here. No. Begzat. Diana. Aruzhan. Aruzhan Beysinbekova. Here. Dilara. Aruzhan Berikbayeva. Here. Camila. Diaz. Anida. Okay. Zarema. Nazar. Ardager. Ardager here. I think she texted here. Okay. Diana. Bekaim. Bekaim here. No. Evelina. Ali Muhammad. Okay. Dana. Orhan Basarova. Maksat. Nargis. Altınay. Meriert. Camila. Aziza. Aziza not here. Okay. İlker. Aydan. Şahruz. Aizia. Here. Okay. Shansaya. Shansaya, are you here? Shansaya. No, she's not here. She just put the Zoom, but she's not here. Okay. Danya? Sabina? And Aruzhan rolled up ay kızı. Here? Okay. Now, here I'm gonna skip this question. You'll do it on your own. Problems with the working capital. Okay, I will ask you to do it on your own. You'll solve at home. Now, I want you to open the book. I'll open it here too. End of the chapter question. Working with the financial statements. Go. Okay, question 5, 6, you're gonna be doing now. And 7 to 14. From 5 to 14. Yes. The page is 76 on the book. So I will open it here. Yeah, you can do it on paper, then you don't submit the paper, just take the picture and upload it on the paper. Yeah.